But you have this survey that says 71% of people, economists and fund managers, blame tariffs for the sell-off in the stock market.
Yeah, there's two.
That's the greatest issue that investors are trying to figure out. There's so many unanswered questions.
Here's what we did. We threw out all the issues you guys are talking about, trade, the Fed hiking, and said, how much have these contributed to the sell-off? A lot, somewhat. And we just ranked these by those who said a lot. That's why it doesn't add up to 100, in case you're interested. Because you could say a lot for Fed and a lot for... But tariffs got the most a lot votes, followed by global weakness. And look all the way to the right there, really backing up Stephanie's point and Jim's point as well, that the worry is not about U.S. fundamental growth right now. Maybe that's all knocking on from left to right, that it all affects growth. And here's the other thing, guys. I hope I have this stacked the right way. But we asked folks, is the current market outlook too pessimistic, just right, or too optimistic? And 63% said this, what's happening in the market now relative to the fundamentals for both corporate earnings and economic growth is too pessimistic.
Look, tariffs have muddied the outlook, okay?
You think?
They've muddied it for investors. They've muddied it for CFOs and CEOs.
And it's a direct contradiction, Scott, to what the president and his administration have tried to do with capital spending, right? And you have this anomalous, unclear, we don't know where it came from, fall off in CapEx in the third quarter. We would be sitting here. Not according to
Kevin Hassett, you didn't.
Well, I don't want to go there, Scott, because we have a fundamental disagreement on what the data say. But let's go with what the conventional wisdom is on Wall Street, which is that new orders for manufactured capital goods, ex-aircraft, were down the last 3 months. And I would tell you we would be having a very different conversation now about the economy if those things were up.
So, Steve, let me ask you. I agree with you. It is tariffs. But what do you make of the fact that we've got the Chinese now picking up agricultural purchases? We've got them talking about maybe looking at the Made in China 2025 plan. We've got a reduction in auto tariffs, and none of this seems to be affecting the market positively. Is it your opinion that the market's getting it wrong by not affecting that? Or is the market saying we don't believe anything the Chinese is saying, just like we don't believe what President Trump is saying on this matter?
It's the latter for me. I think the president has lost the confidence of the market.
But how about
on two scores?
But how about China?
2 scores. I'll come back to China in a second, but I think the market no longer trusts that the tax cuts will deliver above potential growth next year. And I think they no longer trust him more broadly on the issue of having their back, which is exemplified by how he's treating the tariffs, that he doesn't seem to care about the market response to this. I think the market thought they had a guy in the White House who had their back. I think that's no longer feels like it's the case.
So you talk about trust. You talk about having one's back. There's the great belief that the Fed has had the markets back for the better part of the last decade. That question is, I think, up for debate at this moment in some corners. Talked to Gundlach yesterday about what the Fed should do. You got the president saying don't hike. Stan Druckenmiller says don't hike. Here's Gundlach. Should the Fed hike?
No, I don't think they should. The bond market is basically saying, you know, Fed, you've got no way you should be raising interest rates. Look at the 2s, 3s, 5-year part of the yield curve, which are flat at 270. I mean, I guess that is corroborative of maybe a hike, but it's basically saying that in the year 2019, you're going to have a cut. This big, but a cut. That's what's priced into the yield curve. And in 2020, another cut.
You want to give me your perspective on that?
I think it's very difficult for the Fed to make policy that has long and variable lags based upon the vicissitudes of the market. And I think they want to be very careful of not reacting. It's well to remember, and I think the Fed will remember this, we were at all-time highs on October 3rd. How much has the world exactly changed since then? So I think what they're going to do is pick a middle ground on this, Scott, which is to raise this quarter point.
Dovish.
And then
hike.
What's going to happen,
it's become now the same.
Two things are going to be worth following on Wednesday when I report this at 2 o'clock. The first will be the decline in the consensus outlook of Federal Reserve members for the outlook for 2019. The median now calls for 3. I expect it to be in the 2 range. The other thing I'll look at is the growth forecast for 2019 from the Fed. It's currently calling for a 2.5% GDP. I expect it to be somewhere in the middle between 2 and 2.5.
I'm just saying, I mean, you got the Wall Street Journal, you know, with their editorial page today, time for a pause, they say, when talking about the Fed. I mean,
Scott, can I tell you my real concern here? My real concern is that a political issue surrounding the Fed has now been embraced by the market. President Trump went out there and blamed the Fed for the slowdown, at the same time that he was out there extolling the utopian future he had created through the tax cuts. And now all of a sudden the Fed, by going to the bottom range of its neutral on the economy, is going to cause all that to be crashing down.
And
the market, the Wall Street Journal editorial page has done a 180.
Well, you're talking about very
policy.
astute investors. I mean, you know, Druckenmiller,
Warsh,
Gundlach,
who say that. Well, I'm not.
I think they should. I think they should stop the balance sheet. And you know, you and I keep talking about that, but pause it.
You think the chances of no hike have gone up?
Yes. Yeah, I go into this thing with a lot less certainty than I have almost any other meeting.
And if, Tom,
not a
if
lot
there
less,
is-
but somewhat less.
If there is no hike, how does the market react?
You know, like if we were to erase everything up until this point and you said the Fed's getting dovish, we know that it's a risk on development. I think it would be very positive for equities.
If what, no hike?
No hike tomorrow, the market rallies.
But see, here's the thing. If you don't get the hike, you got to worry about the hike in January. Why not get it now?
Because you don't need it is the answer. And the only reason you might need it is the political reasons that you bring up. And they're real, but boy, I don't want policy decisions being made for political reasons. Look at the data. There just is no inflation. And you know that. I'm not pointing at you.
There's
just no inflation. There's no reason fundamentally.
Let's have a fundamental data throwdown right here, which is this. Growth has come in a percentage point above the Fed's prior expectation.
Oh, we're going to have the discussion of future versus past.
Let me finish. I'm not done yet. It's come in.
That's what we're going to do.
Unemployment has come in 0.7% below what the Fed estimated it was going to be.
There's no inflation.
In the face of that, the Fed has added to that forecast exactly 1/4 point of tightening if it hikes tomorrow.
To Joe's point.
Are you telling me that that is not the prudent move?
I am.
In the face of that better growth?
But Steve,
I am
they're
telling you
also
that. I mean, to Joe's point.
They're also pulling the balance sheet too,
Take a
in
breath.
addition
Wanna hear
to
Steph.
raising rates. So they are actually a little bit tighter than it appears on the surface, and I think you've said that before too.
There is that, but that was what they had forecast all along. They hadn't changed that one bit.
What about this whole notion, and I talked about it with Gundlach yesterday, of, you know, the Fed not hiking, it's going to be, oh, no, you know, do they see something that we don't see? And Gundlach was like, that's just complete nonsense. They don't know any more than we know.
He's right.
It doesn't suggest
He's 100%
anything.
correct.
Right.
It doesn't suggest anything other than where we are right now with what's taking place in the global economy.
Right. And
Believe that?
Steve, I do believe that, Scott. And Stephen, to your point with, is it so necessary that they have to make that 1/4 point move, or are they doing it to save face? And if it's to save face, that's the exact wrong thing to do. Wouldn't you agree with that? If they're doing it to save face, rather than because they see inflation and they see these other potential catalysts out there that they have to react to.
I have a weird answer to that.
Please.
What if face is a big part of the way they do business?
What if it is? Is that the right move?
It would be.
It would be.
If having no face in the face of a president who has screamed for this, and all of a sudden the market begins to believe the Fed is less independent and more political.
No, but he's not the only one
Let me
screaming for
finish,
it.
Scott. Let me
Not the
finish.
only one.
If that's the case, then they have a problem, and they have a problem
There
that
are
makes
people
their
who-
job
you know what?
harder in the future.